Alright guys, we are back again and it's time to update you on what's been happening in my stock portfolio in the last month. So what happened in Feb. It's my commitment to you, maintain transparency, but also demonstrate that to hit this very long-term goal that I've got by 2050, a lot of discipline is needed. This is quite a good way of helping me keep that discipline. We'll get into the performance of the companies first. Banco's okay. Relatively untroubled month, and that is 5% of my portfolio, one of my largest holdings. And this is, by the way, we're starting off with those higher quality companies first, that classification. Visa is now the second largest position, up 5 points in month, and that now represents about 3% of my portfolio. Certainly I would be happy to increase the weighting towards Visa. Williams Sonoma, an outstanding month last month. Again, up to 3% of the portfolio now, and now in the 100% club in less than 1 year. Very pleased with that purchase. And then we move to Dropbox, which has had a bit of the opposite month, down about a third, down to 1,200 quid. Still up 10% overall. A very disappointing month in terms of their market price, following a release of their results and updated guidance. We're into Alphabet or Google now. It's done well for me in a year and a bit that I've owned it, 45 points. And then went to Skyworks at just over £1,000, up 12 points. Adobe's reversed a little bit in the month, but still have done well in a short period of time on that holding. And Advanced Health next of all. Very good month for Meta, up 50% in a very short period of time. But nevertheless is one of my regrets in terms of A, not going larger on this one, and B, not recognising really that the price was very attractive compared to the quality of the company around about a year and a bit ago. Unilever's hovering around that 100% return mark. American Express keeps pushing on, 140% now since 2020. Berkshire also very good, well over 100% since 2020. Fortinet, which is due in January, already over 10% up on that one. Somero marginally down, and InMode also has dropped off a bit further. That concludes the higher quality companies. And what I mean by that is companies with high returns on capital employed. It should mean in the long term that we get good returns in the market because they reinvest back into themselves and grow very well. Dividend stocks next. Unum Group is the largest holding in that section, and also in the portfolio over 160%. Got Aviva that is over 50% since 2020, and Legal & General pulled back a bit this month, but very happy with that position overall. Investec been very good since 2020, hovering around that 300% mark, and Citigroup, reasonably new holding, haven't made any progress on that so far. And we've got British American Tobacco, Direct Line, which had a very good month, so I'm back in the black on Direct Line, and plus 500, yeah, very good company. So now we're on to the managed funds, and Fundsmith being the largest of those. I keep adding £100 a month to that position. It's now well over £2,000, and has returned 15% in about a year and a bit. 3100 is the next holding. Cell Train has done well with over 100% return. Good month for the US index. And a good month for the Pacific index. And a very good month, the SP 500 index, up 8 points, so up 36% on that holding. And World Index, I did add to that position in the previous month, slightly larger than it was before. And that concludes the sort of managed by others. So I've got that bit of protection there because I could make mistakes. And this kind of section of the portfolio is there to kind of bail me out if that's the case. Well, I say bail me out, to normalise the returns somewhat. Right, cyclical companies. Now, normally 49 percentage points down in a month would be pretty bad. But in this case, it doesn't really change the situation. Alpha Metallurgical Resources, very, very happy with what I've been able to do with that, and taken a lot of profit off the table before as well. Really steady month for Intel. And of course, Bitcoin has had a very good month, up 50% in that one as an ETF I've got there for that. And Ethereum as well, up over 50%. So those positions that were 50% down on both of those not that many months ago are now sort of majorly up. Okay, so we now go on to the uncategorized, if you'd call them that, ones that don't meet my investment strategy, but I happen to hold already when I got that strategy in place. So not much change for Alibaba in that month. Same for Corsair. Cumulus has dropped off a bit more. And then we've got the two sort of worst performing holdings. So where does that leave us? Well, it leaves us with a thank you to the Patreon members. Join the club to talk investing. Join the Discord. Please do consider joining the Patreon. However, the absolute key here is what is the portfolio doing at aggregate level, and am I on track to hit my long-term investment goal? Now, of course, there's a lot of change month to month, but the general trend, I want to be hitting that run rate. First of all, we moved from 49 to over 49.5 in the last month. And you can see this sort of year-end target is 54, so still quite a way to go to that. But it was positive last month. In fact, it's been positive in January and February. You can see, roughly speaking, an equal amount of increase due to the minimum amount deposit and also performance, whether that be valuation of stock and or dividends. So the key number that I'm always looking at is what's the required run rate, and it's actually unchanged from the last month, 9.62% per year, every year, with that minimum monthly payment in order to hit the million. I think a lot of people investing don't look at this kind of figure, and I think it's very, very important because you need to see when you're assessing investments, have you got a chance of hitting or good chance of exceeding that run rate to mean that you can actually deliver what you expect to do. That's the overview of the kind of sections in the portfolio. Quality companies, the largest. Cash, very, very big. A quarter of the portfolio in cash or cash equivalents. Too large. I'm not rushing to deploy that, but I am chipping into Fundsmith and chipping into a bit of US index and world index on a periodic basis. If I do find high quality companies where I won't overpay, then I will certainly be adding to those positions or opening new positions as appropriate. Did sell a bit of the Alibaba position, so I'm going to be trimming that over the course of the year to reduce my exposure to that company. And as mentioned, as we went through, added to my Fundsmith and World Index. That's what's happened. We've come to the end. So pleased that you could join me. I'll see you on the next one.